Thank you, Anna. Welcome, everyone. For some of you, this may be a refresher from the one that I previously conducted last July. But for others, obviously, it's going to be new, and it is important that you do really take heed of what's in this presentation if you haven't already started the process. So what we'll go through here is what is off-payroll working, what is the current situation and how it will change, how will it affect your payroll processes, and what actions you need to take to prepare. And obviously then, as I said, followed by a Q&A session. Thank you, Anna. So, what is off-payroll working? So let's start by saying this all began with the IR35. Now, you'll have seen that in the title. Now, the IR35 is a number of a press release issued in some 20 years ago by the then Inland Revenue. We now know it as HMRC, of course. And it's properly known as the intermediaries legislation and came into force in April 2000. This is where organisations engage workers on a self-employed basis and usually work through their own intermediary rather than on an employment contract. So in effect, they become a kind of disguised employee. The decision at the time was that it would be up to the limited company, the personal services company, because they'll be set up as a limited company and therefore are advertised as a limited company. The person who would carry out the service through their own intermediary that is currently responsible for deciding if the relevant rules apply for work in the private sector, and they would need to declare and pay the tax and NICs over to HMRC, not the company that's contracted with them. This has ended up over the years with HMRC then taking individual limited companies, one man, one woman kind of company, to court over where they thought they were not operating the IR35 rules correctly. Now, they won some cases, they also lost many cases. And there's a link at the end of this presentation to the IR35 rules. So such workers were therefore off payroll because they weren't on payroll. Now, we wind forward some 16 years and we have the off-payroll working rules in place since 2017 now for the public sector, which now will happen for the private sector this coming April. As with the public one, it will be up to the engager, and I say engager rather than employer, because an employer means that they have employees, and these are not employees, they are deemed employees. So it's up to the engager to determine the employment status, not the limited company or the PSC. So we're back now with what was really the original intention in 2000. So off-payroll working rules only affect those people working like employees, but through their own intermediary or the PSC. They do not apply to the self-employed, where an agency contracts directly with the worker as an employee and operates tax and NICs, or engages them on a self-employed basis but operates tax and NICs under agency rules, then off-payroll working rules do not apply. Equally, where an umbrella company employs the worker directly as an employee and does not contract with the worker's PSC, the off-payroll working rules again would not apply. But the employer, the engager, can use HMRC CEST tool, which is Check Employment Status Tool for Tax, which has in the past, and since it was brought in for the public sector, been much criticised when it was first released, and it has had several updates, and updates including now for the private sector. So, as a deemed employee, such workers are not entitled to receive statutory payments such as statutory sick pay, statutory maternity pay, statutory adoptive pay, or any other of the statutory parental payments, including the new statutory parental bereavement leave and pay, which comes in from next April, or be auto-enrolled into a pension scheme. Student loans and postgrad loans should also not be deducted, as the PSC would deal with these themselves through self-assessment. They're also not due to holiday pay or the national minimum or national living wage rates. You would also not expect a contractor to apply national minimum wage rates, because obviously they would be charging a lot more than the national minimum wage rates. But there you go. They said they're not entitled to them. Okay, thank you, Anna. So why are the rules changing? So as it says on the screen there, the rules seek to ensure that individuals who work like employees but through an intermediary to a client in the private sector will also operate in a similar manner to that operated in the public sector, which, as I say, was 3 years ago. If clients don't follow the new legislation, in other words, they totally ignore it, they will be at risk of committing the criminal offence of facilitating tax evasion. That's just one thing I add there. The off-payroll working rules themselves don't do that, but by virtue of the fact of not operating them, you could be at risk of the criminal offence of facilitating tax evasion, because obviously you'd be employing somebody and not paying the taxes as you should be doing. Thank you, Anna. So the current situation, and how will it change? Obviously, until the 6th of April, it's as you were. So still within the IR35 rulings, but as I said at the beginning of this presentation, you will need to get ready for this now if you haven't already been doing so, as it will be a big change for the private sector. We understand there are approximately 900,000 one-man, one-woman companies in the UK. So you can imagine the scope and breadth of this legislation. So currently, you employ that contractor, a specific person, not an employee of another company. They are a person. You probably know them and have employed them several times before. And they're a limited company, a personal service company, to do a specific piece of work for you. And you pay their invoices, including any agreed expenses and the VAT. You don't deduct tax and NICs from this. If you were to have recruited them, it would have cost you around 17% in additional costs. That's employers' national insurance, auto-enrollment pensions, and possibly the apprenticeship levy if you are a large enough company. So you can see currently the advantages to employing the services of a PSC, as though they were your employee, and currently it is their responsibility to declare under IR35 rules. Now, from the 6th of April 2020, if you are a medium to large employer, and we'll discuss what exactly that is shortly, then you'll be subject to the new rules if you employ the services of a PSC, and will need to produce a service determination statement for each of those deemed employees. Thank you, Anna. So what you need to do before April. First thing is check whether you qualify as a small business. You would need to monitor these rules regarding small businesses annually. So if you are classed as a small business, then the off-payroll working rules do not apply to you. If these rules, however, are exceeded in a year, then this status is not valid. So what are the rules? Now, according to the Companies Act, definition of a qualifying as a small business are annual turnover of not more than 10.2 million, balance sheet total of not more than 5.1 million, number of employees not more than 50. Now, in order to qualify as a small business, you need to satisfy 2 of those 3 rules. If you exceed those, you are a medium to large employer. If there is a change, it will apply from the start of the tax year following the end of that business year to which you're looking at. Now, in a government response to the consultation last July, they also stated that unincorporated companies, in other words, not limited companies, will, to reduce complexity in the applying the rules, There will be a simplified test which will consider turnover for a calendar year only, such that only unincorporated clients with turnover exceeding 10.2 million will be in the scope of the reform. So that's exceeding 10.2 million. The existing IR35 rules, however, will still apply to smaller businesses. So, decide if you employ the services of a PSC or do so via an agency. If you do, you will need to determine, and again, this is if you're a medium to large employer, need to determine the employment status of these and inform your payroll department or agency of your decision where they are to be put on payroll. Now, the CEST tool, which I've referred to, and there's a link again at the end of this presentation, is there for you to use. You don't have to use it. There are other means of obtaining or clarifying whether or not you employ the services of a PSC and whether or not they could be deemed as a deemed employee with you. But if you do use HMRC, they have said they will accept the findings of the tool, provided the questions are completed correctly and are answered correctly. In other words, you're not telling any fibs to the questions, and the results can be printed out. If you determine that they're a deemed employee, then speak with your finance people on how the invoice should be dealt with. Because obviously a PSC will provide an invoice to the business of which there will be VAT and possibly expenses that have to be taken into account, as well as the main fee for the work performed. Which department is going to do the paying? Payroll obviously will process the main body of the invoice. So in other words, if the money for doing the job is £1,000 plus VAT, we would process the £1,000 and deduct tax and NICs from that. But it's a case of what's happening with the VAT, what's happening with the expenses. Are they VATable? Are they taxable or non-taxable expenses? So you need to determine with your finance people who's doing what. Which department is going to do the paying, payroll or finance, or even both, for separate items, of course. Payroll could pay the VAT as a non-taxable item, but it depends what the business decision is regarding all that. Payroll could calculate the tax and NICs and net off the net amount if it was that the finance people were going to pay the net pay, but it's a decision you will need to take. The engager will need to communicate with the personal service company about their decision and issue them with a service determination statement, even where the decision is yes or no to being put on payroll. In the government response to the consultation on how this states, the government will therefore legislate to require clients to pass the status determination and reasons for the determination down the contractual chain, together with as well passing them directly to the worker themselves. If you are one of our clients, you must inform us if you are employing the services of a PSC, as these will need to be set up on a separate payroll, and I emphasize a separate payroll there, and how the net payment will be dealt with, if not through payroll. Once the deemed employee is on your separate payroll, you or we will deduct the appropriate tax and NICs and pay over to HMRC together with your normal employees' tax and NICs and employers' NICs where appropriate. And once again, when entered on this payroll, the system will send a marker to HMRC on the FPS informing of an off-payroll worker. I will emphasize here that once on this payroll, you cannot transfer a deemed employee to your normal payroll. You must make them a leaver on that payroll and then start them on the normal payroll. Similarly, you cannot transfer an employee to be a deemed employee on the separate payroll. You must make them a leaver on the normal payroll and start them on the off-payroll working. But I must emphasize that if you're one of our clients. Thank you, Anna. So, I mean, we've covered some of this already in the previous slide. So how will this affect payroll processes? Moorepay will support clients who have identified that they employ the services of a PSC, a personal service company, by only offering a separate payroll, which will deal with the unique circumstances of an off-payroll worker, stroke deemed employee. You might want to consider, if you've got a HR system, if you have one, remember they're not an employee here. They are a deemed employee. Now, the off-payroll working rules and guidance have been in the public domain now for over 12 months and have changed over the time. And one of the most recent changes actually took place on Monday of this week, believe it or not. We should change the operation of the off-working rules to only apply to payments made for services provided on or after the 6th of April. Previously, it said payments made after the 6th of April, but that could have meant an invoice that you received for a PSC who worked for you in February or something like that, that they presented to you in April for processing. That would previously have meant that you would have to have set them up on the payroll in April. But now it's changed to be the rules will only apply to payments made for services provided on or after the 6th of April. So you will need to have a starter checklist. Now, the current guidance from HMRC states that you will put them on BR tax code and use statement C. If they have a student loan and they indicate on the starter checklist that they've got a student or postgrad loan, do nothing with this. All you're getting from them is the basic details here, like the national insurance number and the national insurance table letter number will be in accordance with their age, the date of birth, their address, their personal address, that is, not the business address. Don't insert a salary. You're only paying the main body of the cash invoice. So that's not going to be the same every time you pay them, of course. It could be £1,000 this time and £500 next time, or £20,000 next time. So it is just a case of putting a figure in there of the taxable amount. And remember, the tax is on the tax and NICS is on the full amount of the body of the invoice, because VAT is added then onto the top of that. Expenses, as I say, could go via payroll or by finance, taxable or non-taxable, and the VAT could go on the payroll as well as a non-taxable item. You'll produce a pay slip. As I say, decide who is going to pay the net pay, payroll or finance, and you would need to inform us if you're one of our clients that you would want anything other than by paying via the payroll. In other words, if you were the finance department was going to pay the net amount, you need to tell us. When the contract is finished and they leave, you would produce a P45, and if they were still with you and on your books as at the 5th of April, you would also need to give them a P60. You would pay over the tax and NICS to HMRC together with other remittances in a normal manner each month. Thank you, Anna. Now we've been talking here this last few slides about intermediaries, about personal service companies, PSCs, client engager, deemed employee, CEST, and SDS. Those are some common abbreviations that you'll hear and read on HMRC's website about these. So just to explain clearly again what each of these is. So an intermediary will usually be the worker's own PSC, personal service company. They could also be a partnership, a managed service company, or an individual themselves. Essentially, the individual would be an employee if they were not working through an intermediary. Personal service company, usually the single director limited company who invoices the engager for their services. And the engager is the client, the organisation, agency or third party paying the worker's company, often referred to as the fee payer. The CEST tool, which is the HMRC Check Employment Status for Tax tool, is an online tool for working out whether the off-payroll working rules apply to your contractor. An SDS is the service determination statement, which you should complete for each of these people, whether or not it becomes that they are deemed an off-payroll worker or not. Complete one for each and give it to the contractor and down the supply chain as well. That's my presentation over with for now, and as I say, there's plenty of links at the end of the presentation for new information supplied by HMRC and also amendments to previous information supplied by HMRC to do with off-payroll working both in the private and public sector. But I'm now going to hand back to Anna, who's going to explain a little bit about some more information that we can supply to you.
Thank you, John. So yes, before we move on to the Q&A session, we will just make you aware of some other resources that you can access that will be useful to you when planning for April. So we've actually produced an off-payroll working in the private sector guide that gives you a background to what's changing, understanding the off-payroll working rules, and it does cover a lot of what John has included in the presentation today. So it would be something that I think you find useful. If you do want to download this guide, you can simply go to www.moorepay.co.uk/OPW and you can download the guide there. In addition, we're holding live demos on off-payroll working on the Monday the 17th of February at 2:30 p.m. and Wednesday the 26th of February also at 2:30 p.m. And during this demo, it will be my colleagues Dan and Sophie that will be running the demo, and they will go through things like options to add data into the payroll, such as invoices and timesheets. We'll explain how the software restricts worker entitlements. We'll go through different ways of paying your deemed employees, and we'll also show you how we can deliver the remittance advice. So if you'd like to sign up for one of these demos, they'll last for about half an hour, and you can do this in the resources section of our website. And when I send you an email with a copy of the slides and recording from today, I'll also include a link to the demos so that you can sign up there as well. And as John mentioned, we've also listed some useful links here from HMRC that you can refer to as well. And like I say, I'll send all of this over to you in an email. So we will now move on to the Q&A session. I know that we have had quite a few questions come through so far, so I will begin to work through them. The first question is, you say that they shouldn't be auto-enrolled into a WPR pension. Can they opt in?
That's a good question, Anna, and it's one that I did pose myself a while ago when we were reading these requirements. And no, they cannot opt in. They are not actually an employee. They are a deemed employee, so as such, they can't opt into auto-enrollment pension schemes. That's it. You know, that's they would deal with the pension. They would deal with their own pension schemes themselves.
Right, okay, thank you, John. Moving on to the next question. The next question is, if I'm given a P45 by the deemed employee, should I use it?
Again, another good question. One would think, why not? But really, the rules as given to us by HMRC are that you use BR. And I said that in the presentation, we use BR. So you ignore the P45, use BR, statement C, and that's what we provide to the HMRC. Should it be that HMRC want us to operate anything different, they would need to tell us. But the rules from HMRC is that we operate BR. So it's entirely up to HMRC if they want to tell us to operate any other different code. But that's the rules from HMRC to payroll providers. We operate BR. Actually, payroll have argued for a good number of months that why should it be BR? OT would be more preferable, but HMRC have stuck to the guns and said no, it's BR.
Thank you, John. I am moving on to the next question. if someone is taken on as an off-payroll worker, but then becomes an employee, can we transfer them from one payroll to another?
I already covered that actually, Anna, in the presentation. If you've got an off-payroll worker on a separate payroll and it's been operating okay, but then you decide, actually, it's easier for me to make them an employee. But remember, making them an employee means you will pay you would be subject then to auto-enrollment. But you can't just transfer them. You need to terminate that employment, make them a leaver on that off-payroll working payroll, and then start them up anew afresh on the standard payroll that you might have got. And as I said again in the presentation, similarly the opposite way around, if you've got someone who is on your normal payroll and they're going to become a contractor for you instead, you would need to terminate that employment on the normal payroll and set them up on the off-payroll working payroll.
Thank you, John. We've also had a few questions around, is Moorepay doing anything to support businesses in preparing for April? So yes, Moorepay has set up a fast-track payroll service to support businesses in becoming compliant with this new legislation. So as I mentioned earlier about the demos, if you sign up for one of these demos, we'll run through what this will look like and it will give you a good insight within that half-an-hour session. Let me just have a quick look. We've received a few more questions through. We've had a question saying, why a separate payroll? Surely it could be part of the employee payroll.
No, we have determined that it will be far better to set up and cleaner to set up a separate payroll because obviously only certain elements of pay, I should rephrase that. Certain elements of pay and deductions are not applicable to off-payroll workers. Right, as I described about SSP, SMP, SAP, they're not due to be auto-enrolled, they're not due to have student loans deducted or postgrad loans deducted. This separate payroll will be configured in that manner, right? Whereas a standard payroll would be open for use in that manner for normal employees, of course. But an off-payroll worker working payroll would not be set up in that manner. So it is cleaner and far easier to operate in that manner. And also because you have to say this is an off-payroll worker, then to mix them in with other employees again is not clean.
Thank you, John. That's useful. Now, next question is there an SDS template when you were speaking about needing the SDS?
There might well be. I'd have to follow up on that, but basically it is a statement to say that we have followed the CEST tool, and we determined that you are or you are not a deemed employee, and the reasons behind that. I haven't seen a template, but I'll inquire and I'll get back to that inquiry in due course to find that out. So is there a template?
Brilliant, thank you, John. And we've had quite a few questions that are around similar things to what we've already covered. There are a few questions around saying that you've mentioned that it doesn't apply to self-employed people, and that is correct, isn't it, John? It's not. Yes. This isn't something for self-employed.
No, if they're set up as a limited company, a personal service company, then they will be subject to this. Obviously, when the engager goes through the process of the CEST tool of determining that employment status, but no, not the self-employed. Excuse me.
Thank you, John. And we'll now close the questions off there. If you do think of any questions in the meantime, then feel free to either drop them into the box now and we will deal with them separately, or you can email myself, hannah.boo@moorepay.co.uk, and then we can come back to you that way. So in terms of how you can connect with Moorepay and also access additional resources, there's a whole host of content on the Moorepay website, which does include a bi-monthly payroll legislation guide, which is located in the resources section of our website. And if you follow us on any of our social sites, we publish all our new blogs and guides on there, so you'll see them flash up on your newsfeed. I hope you found the webinar this morning useful. Thank you for joining us, and thank you very much to John for hosting the webinar today and for answering your questions. We'll close the webinar now, and I will follow up with the slides and recording as soon as they're available. Thank you very much for your time.
Thank you, everyone.